Welcome to the show. I'm your host, Scott McGillivray, and this is the Real Estate Rebel podcast. Now, don't forget to like, subscribe, and follow us wherever you get your podcasts. And visit me at scottmcgillivray.com for more real estate education and information. Today is an interesting topic. We are talking about the cost of renovating to add value to your space, the impact it can have on your finances, and if it makes money or not. And it's such an important topic that joining me today to discuss this is the money and travel expert, Barry Choi. He is a finance and budget travel expert, and he advises on how to make smart financial choices so that you can live your life to the best of its ability. Now, I'm looking forward to hearing his thoughts on this topic because I definitely have mine as a real estate investor. Adding value to a property, doing value-added renovations is a critical part of increasing the value of the properties that you're working on, and it's an important part of the real estate investing process. So we'll get to that. Also wanted to share with you guys when talking about value-added renovations, I was reading the results of a recent survey by the National Association of Realtors about home renovations in 2020, the pandemic year for renovations. And the results demonstrate that despite the financial difficulties brought on by the pandemic, 77% of homeowners say that they that their renovation budgets for 2020 are the same or greater than last year. However, what they are renovating is very different. In fact, there's one item that I saw on the list. It's in the top 3. I have never seen it even in the top 10 before, but it's really interesting to see that people are spending more money on renovations during a pandemic, and one item has made it so far up the list that it's in the top 3. It's never been there before, and it surprised even me. I'm going to tell you what that one is at the end. Maybe you can guess what it is. Think about it, but I'll share that with you. Now, as we bring Barry in just a moment, I do want to mention to you guys that he is an advisor when it comes to finances, and he looks at things maybe a little different than I do as a real estate investor. So I'm going to find out where we have things in common and where we challenge each other as to how wealth is created. I always look at financial advisors as preservers of wealth. They do wealth preservation. I like wealth creation. I mean, it's nice to have money, but if you don't have it, I'm the guy to talk to about how to create it. A lot of that's done through leverage and real estate investing. So we will see what Barry has to say. I did read on his blog that he says you shouldn't use an increase in the overall value of your home to justify a renovation. We'll see what he has to say about that. I don't completely agree. So let's bring him on the show. All right, so let me introduce my guest today, Barry Choi. Barry is a money and travel expert. Welcome to the show, buddy.
Thanks for having me.
I'm excited for today's topic because, number one, we're talking about money. And number two, I don't know if we're going to agree on everything, to be honest.
That's what makes it good, though, right? You want to have people and guests that disagree and a good open discussion, right?
Absolutely. So you've been like a finance and travel and kind of advising that space for how long now?
Oh, officially the last 3 years, unofficially the last 5 to 10, depending on how you look at it.
Okay. Well, the world is in a crazy place, so it'll be really interesting to see how this stuff has impacted the future. But we've got 3 big topics today. You know, we're going to be talking about adding value through renovations. We're going to be talking about how comfortable people are with borrowing money, and especially in order to renovate, how to finance renovations. And then finally, at the end, the last thing I want to cover with you is about what's going on during a pandemic, you know, sort of what your thoughts are on how all that's gone. But let me start at the beginning here.
Sure.
Because I read something on one of your blogs and it immediately caught my attention, and it was had to do with adding value through renovations, good or bad. What are your thoughts on adding value to your home with a renovation?
You know, you're the expert, and I think you ask anyone who's into home renovations, and depending on what you renovate, it can have more value than other things. So quite often, a kitchen renovation, a lot of people know that brings you good value, but only if it's done properly. If you use cheap contractors and cheap materials, then what good is that, home renovation if you're using the cheapest things? New homeowners aren't foolish, in my opinion. They know what laminate is. They know what granite is. They're just more informed buyers these days. So if you're going to try to cheap out and think that all of a sudden you're going to profit big, I think that's a huge mistake these days.
You're absolutely right. I mean, I've always said only rich people can use cheap products because you have to replace them all the time, right?
Yeah, well,
So
that's the crazy thing. My dad was an immigrant. I hate to like throw him under the bus here, but he used cheap contractors, and over the years, he keep bringing these cheap contractors back because they were cheap, but he had to keep bringing them back because they did cheap work. So it sounds ridiculous, and this is endless cycle. When I'm in 5, 10, 15, I don't know any better. But I'm pushing 40 now. So for the last 20 years, me and my brother have been to my dad. Why do you keep going to this guy? You keep having to fix it. And it's not a good job. And he's just like, oh, but it's cheap. It's like, you're like contradicting yourself. It sounds ridiculous. And I just know one day, it could be 10, 15, 20 years from now, I'm going to have to deal with it in one way or another. So it's funny how these things work out. And, another big concern for me with people who do home renovations is quite often they tell themselves, oh, I can spend this money because it's going to increase my property value. And that's true. But if you didn't have $50,000, $60,000 to begin with, and you're not selling your home for 30, 40 years, are you really increasing your property value, or are you just telling yourself that so you can spend that money? And again, if you're doing it for your own purposes, you just want a new kitchen, you want a new bathroom, I get it, but just don't make up a lie to convince yourself to spend money.
I think people get excited. I don't know where everyone gets all these ideas about renovating their homes. It can't be from TV shows.
No,
But
no, no, no.
but yeah, it is. Listen, it's people get super emotional, and it's really personal
Mm-hmm.
when you're doing a renovation on your home. But where you and I are probably aligned is, be practical about what you're doing. And I basically divide it as follows. And you tell me if you're aligned or you disagree with me in some capacity. But there's basically only two reasons to renovate your property, especially if you're borrowing money to do it. Number one is to have what I call return on lifestyle. And that
Mm-hmm.
is, you might buy a property that's a real mess. The kitchen's falling apart. The bathroom might be moldy. In that scenario, it might make more sense to borrow some money to do the renovation to improve your life, knowing that the work you have to do to afford the borrowing costs is less painful than living in a terrible space, right? So you're basically trading off working harder in order to get a better place. And if you're planning on living in a house for more than 5 years, then really what you're doing is for personal gain, as far as I'm concerned. Does that make sense?
Yeah, that makes perfect sense. You think about it, it's really just a return on investment, the return on your time. What can your capital buy you? So if you're spending that money that you've earned or even borrowed, it's another form of leverage, and you're going to use it towards to renovating your space. That's going to make you a lot happier on a daily basis. I don't think there's anything wrong with that. That said, if all your money is tied into real estate and you need to borrow $50,000 or whatever amount it is, and you've got no other savings, maybe it's one of those things where you're like, do I need to renovate at this time? Do I need to move? Is there other things I can do with my money that will set me up in the future to put me in a better financial position? And don't get me wrong, some people prefer to invest in real estate. Some people invest in the stock market. Some people do both. But for me as a finance expert, I like to recommend people just diversify and just don't assume that regardless of what you're investing in, it's always going to go up in price, because there will always be people out there who are trying to sell you something, sell you on the stream and say, hey, invest in this. It'll always make you money. Jump into the real estate market now. It can only go up. Hey, buy this stock. It's guaranteed to go up. Look at Apple or whatever. It's like, there's risks with everything. And I think most people don't realize that it's not a guarantee.
It's never a guarantee. You got to be smart about it. So you got return on lifestyle, return on investment, which is the
Mm-hmm.
sort of the flip side of renovating your home. For me, that is about the folks who are planning on being in a property for less than 5 years. You need to think about, are you really getting more value in your home than the cost of the work that you're putting in? That's the critical question in that scenario. And I'm a supporter of people who borrow in order to add value, in order to make money.
Mm-hmm.
And I know you got to be smart about it. You don't just, go ahead and blindly borrow. You have to make sure you're going to be able to cover the cost of financing until you do sell and recoup that money and hopefully a profit to go with it. But what are your thoughts on that?
Again, it's just strictly about how comfortable you are with leverage. If you're a homeowner and you, like you said, you're going to move within the next 5 years, and there's certain aspects of your home that you've been neglecting, that can definitely bring value to your home. Yeah, definitely. Why not start getting it done now so everything's in place when you're ready to move? But I'm sure some things are better off holding off. So if you're about to sell in 5 years, maybe you wait until you paint into a few months before, because 5 years is a long time. You can screw up a lot of things. I have a daughter. I painted everything, and all of a sudden, I got to repaint again. It makes no sense. But at the same time, if you're going to move, you've got an outdated kitchen, renovate it now, or the bathroom. Enjoy it for those 4 or 5 years, and then when you're ready to sell, I highly doubt, unless you've done a really, really bad job with your design decisions, that it should, in theory, increase the value. But at the same time, you're the expert, being smart about what it is. If you're going to go super luxury, high-end products, but all of a sudden you're in an area that's maybe not so desirable, think about what makes sense for the area, the type of home you have, and even the medium income in your neighborhood currently.
Yeah, all good things to factor in. I think we're on the same page with this one. There's really a couple of ways to justify renovating your home and that adding value, whether it's about return on your lifestyle or return on investment. It's just being calculated about it. And I can appreciate that. But I think the underlying theme here, and what kind of brings us to the second thing I want to talk about, is the idea of borrowing money to do these types of renovations, or just the idea of borrowing in general. Where are we at in North America with our ability and propensity to borrow these days?
Well, I don't know about you, but I can't open up my email, go to an ATM, or even check my mailbox without getting an offer for a higher credit limit, right? I literally cannot go 2 hours without someone offering me more credit. So maybe that's some context. And another context for people watching is, Canadians have some of the greatest debt levels in the world. Our debt levels are even higher than when America had their real estate crash about 10 years ago. So is debt an issue? Definitely. And people are wondering, well, how are we in this situation? It seems like the economy is doing really well. We keep seeing the markets go up and up. Well, it really comes down to cheap lending. Interest rates are the lowest they've ever been, ever. 2 or 3 years ago, we were like, they can't get any lower, and they started to go up. And then the pandemic happened, and all of a sudden interest rates are back down to where they were 10 years ago. And there's a direct correlation. As soon as the Bank of Canada reduced interest rates by half a point, instantly you saw real estate prices go up and up to new record highs. So there is definitely a direct correlation. And what people don't realize is, I hate to generalize here, but a lot of people just don't understand how interest rate works. They don't understand what they're borrowing, how much they're paying. Or when you stretch out your payments to a longer term, it reduces your monthly carrying costs. And people look at the monthly fees and be like, oh, I can afford $100 a month. Well, it is $100 a month or whatever. But then if you're paying it over 20, 30 years, you're paying a lot of interest.
Yeah. I think that, again, this one's tough because borrowing money, it's a normal part of doing business, and it always has been, right? But from the general population perspective, we are living, I feel anyway, myself, I would say, and anyone who's probably under the age of 45 is living in the shadow of their parents' reality, which is my parents had interest rates of 18 and 19% on mortgages in the 80s. And when I say the word, debt or mortgage to my mom, like her eyes almost pop out of her head. She's like, pay it all off. Got to get rid of it. It's the devil. You're going to be in so much trouble with debt. But the reality is, if you look at the numbers now, you're almost crazy not to use some leverage as an investing tool. For the last 20 years, interest rates have been getting more favorable to the point where, what are we at? I just secured a loan at 1.8% interest. That is ludicrous interest rates. And I get the idea that if you're using leverage for consumer items, like you want to buy a new car or you want to buy new clothes, that's just, as far as I'm concerned, just don't borrow money to buy things that lose value. That's dumb. You're paying interest to lose value. But what if you can borrow to make more money than the cost of borrowing? When does that become okay to promote?
Well, you hit so many points. I'm in that age demographic. I already alluded to how old I am. My parents are definitely like that. My parents are immigrants, like I was saying. So debt is a huge concern. And I'll admit, they like got into my head, right? Like I'll say, it's like, had I used leverage for me, like full disclosure, had I borrowed more at the beginning, I could have been living in a detached house in Toronto, fully paid off by now. But instead, I took the safe route. I saved a huge down payment. And I'll honestly say, even right now, sometimes I feel like I'm the idiot because I didn't, borrow like so much dollars and get it. And I would have come out ahead. But like at the same time, we can say that, and we can and look at people we know. We look left, we look right. You got that house when it was cheaper. It's $200,000 more now, but I still know you're house poor. I still know that you pushed off your wedding, your honeymoon. I know to buy that car, you had to get an 8-year term. Now, is that what you want? Do you want to be house poor? And some people, like you said, they buy consumers goods and it's not a good deal. Maybe that's not what you want. But like I fully admit, right now, that is insanely cheap. You said you borrowed at 1.8, was it? I think you got ripped off. I've seen rates down at 1.5 now, right? Like you're paying too much, right? So I will admit, like even my wife and I were thinking about moving, right? Like we've been working for 2 decades. We've got a daughter. It's time to change space. So originally I was saying, it's like, you know what? I'll save a little bit more, or maybe I'll get HELOC in my current home. That'll give me a little bit more equity, so I have a bigger down payment for my next home. But then I'm like, why would I do all that? Because like, if I got a HELOC, it's actually going to cost me more than borrowing for a new mortgage. It makes no sense, right? And at the same time, like you're right, like your mindset needs to change. But at the same time, you got to think about fundamentals. So if you're going to borrow money, yeah, we can talk about purchasing assets that will go up in value. But at the same time, what I'm concerned about are the people who are living paycheck to paycheck. And this may sound ridiculous, but I remember reading a recent study from the Canadian Payroll Association, and they said 50% of Canadians are living paycheck to paycheck. So some people will say, it doesn't matter, I've got $1 million home. But if you're just making your mortgage payment and you're not saving any money, you're living paycheck to paycheck, right? And that's the reality that a lot of us face. So yeah, using leverage can be definitely a smart tool. Yourself, you are well aware. You can build an empire, you can start a business. But at the same time, what happens if you can't service that debt anymore? What happens if you lose your job, which is very possible, and you've built up this empire of real estate, or not even doesn't matter, just even your own home, and you lose your job? How are you going to service that debt? And that's what I'm concerned about for Canadians.
Rental
more than anything
income.
else.
Rental
Well,
income.
No, rental income is one thing, but what about your primary residence where you only own one home? You've borrowed too much. You get laid off. There's so many couples right now because of the pandemic. Both of them have been laid off, and if the deferral payments weren't out there, they'd have to sell.
We honestly, like, I could talk about this for hours, and I feel like we could have a debate about it, because I live between the two arguments. I see where you're coming from, and I agree that the majority of people are living paycheck to paycheck. I have lived paycheck to paycheck in my, early days. My argument is, if I hadn't used leverage to create a portfolio of investment properties, I would probably still be living paycheck to paycheck. However, I think the real question is our system broken when it comes to teaching people about money and understanding the difference between good and bad leverage?
Yeah, I think so. It's not just specifically the leverage. It's about personal finance in general. Ask anyone who went to high school, college, university, one thing they don't teach you is how to file a tax return. How many people don't understand what compound interest means? People don't realize how interest is calculated for your credit card payments. They see the minimum payment on their statement and be like, oh, that's all I have to pay. But then you're paying 20% interest. You and I are talking back and forth, and it sounds ludicrous that we're even having a discussion and people don't understand why 20% interest is a bad thing, when we were just joking how you can get a mortgage for 1.5%. And that's the inherent problem that we're having right now. There is definitely a lack of education. And, just to go back to leverage, I 100% agree. You use leverage to your benefit, and it made sense probably for your lifestyle, your risk tolerance, but not everyone feels that way. And more importantly, I think it's very difficult these ways to use leverage to really build out your equity or to buy a home, just because the price of real estate within Toronto and Vancouver have gone up. Now, if you're in different areas of Canada, I do believe you're right. There's definitely ways you can use real estate and leverage to build equity. But, look at the people who in Alberta, they bought 10 years ago and they probably still haven't made any money. So the more important thing we should discuss is just the fact that, yes, it could go up, but it could also go down. And it really comes down to your comfort zone. I'm like you, I'm kind of in the middle. I used to be more conservative, but now I totally understand it and I get it. And like I said, I think I missed out on certain opportunities. But at the same time, more importantly, I think people got to be able to sleep at night. And if you're borrowing a ton of money and you can't sleep, that's never a good thing, right?
Hey, I lose more sleep about the things I didn't do than the things I did do. So
that's me these days, right?
It's really interesting. When it comes to leverage, I have this interesting example, and this could be the renovator and contractor in me. But you think about money as a nail in a wall, right? If I hammer a nail into the stud in the wall behind me here, and if you want to go and get that money and you just grab that nail and you try to pull it out, it's going to be painful. It's going to take you a long time. There's going to be some blood, sweat, and tears trying to rip a nail out of the stud. But if I taught you how to use a hammer, if I said you should use a hammer to get that nail out, hammer's got two sides to it. It's got the face, which means if you use the wrong side, you could actually nail that nail in even worse and make matters worse. But if you just take some time to educate yourself about the claw on the back of the hammer, it becomes pretty reasonable and easy to see that it's way easier to use the leverage of the hammer to pull out the nail than it is to use your bare hands. So education is the tool to allow people to be more profitable with money and whatever their investments are, versus where I find, a lot of people are just out there trying to pull nails out with their bare hands. They're not using leverage in order to, increase at an exponential rate what their potential future looks like. And, for the average person, looking at a hammer and trying to understand how to use it and building something might be intimidating, the same way educating yourself about money can be intimidating. But boy, if you just took a few minutes to understand, you'd spend the rest of your life having a lot easier time attracting money and using leverage to do it. So that's my renovator's example of how money can be difficult or money can be fairly simplified, but you have to understand how to use the tools.
Yeah, and for me, I think it's just tools is a perfect example. But to me, it's just like I feel like people are kind of looking for shortcuts. They think they can invest in this condo or whatever, and instantly they'll get rental income. I think you'll agree that pretty much every single home in the GTA or Vancouver probably isn't cash flow positive these days if you're buying new. And then they're thinking it's like, oh, it's okay, but it'll make money in the future. Well, it's possible, or I'll Airbnb it. Again, you look at the pandemic, look how quickly things dropped. The rental market got flooded, and all of a sudden it's a renter's market, right? Things can change very quickly. But using leverage is just one thing. Either you have it or you don't have it. We can talk about it. Your analogy with real estate and renovations is perfect. But another example is just think about how you use your money to invest. All these times, quite often you'll watch news and you'll read articles about people falling for Ponzi schemes where they're guaranteed 20% interest. You invest a small amount first, then they give you your interest. Then you invest your life savings, and then all of a sudden that money's gone. And you're like, how did people fall for these things? Well, it's really easy to be misled. But like you said, if you take your time to educate yourself, you can take that capital that you have and invest it in different ways. And I'm strictly talking about just from the financial markets right now. But you're right. If you're using that money, being smart about it, you can definitely grow your empire. Or you can hope for a shortcut, fake it till you make it, and maybe you do, but most people don't.
Yeah, I don't really believe that there's any get rich quick ideas out there. It's get broke quick for sure. everybody's trying to get money from you, right? So you have to understand how money works to get ahead of it. So let's kind of move forward a little bit, since we are talking
Sure.
about borrowing money and financing renovations.
Mhm.
What type of debt would you say would be your best worst case scenario? If you have to finance these things, you've talked about credit cards, you've talked
Mhm.
about mortgages. What other options do people have?
Well, the obvious route is just any low interest debt that you have, right? That you can get access to, rather. So if you've got equity in your home, a home equity line of credit is perfect. I believe the limit right now is 65%, but it could go up to 80% depending how things, I don't know the exact details. But because it's a secured type of credit against your home, it typically has the lowest interest rate possible, which is a good thing, right? If you
Yes.
want to use leverage it's not even leverage. Sometimes who has $50,000 just sitting around in cash, right? Like it's just reality. Sometimes you buy a car, you buy whatever, you need funds, right?
Mhm.
Another reasonable amount a way to get money is to a personal line of credit. Banks will offer it if your credit is good. The rates are a little bit higher compared to home equity lines of credits. But if you have no home equity, obviously you still need to borrow money some ways. The
Yeah.
problem with that is, technically speaking, the banks could recall that money at any given time. And a lot of banks did during COVID because they're worried about their books. So if the bank says, hey, you got to pay back that $30,000 and you don't have it, you're going to have to find a solution because the banks are going to want that money one way or another. We talked about credit cards, and that's something that you want to avoid. But at the same time, I do think that you can really use them to your benefit to a certain extent. So if you have the money that you can repay and your contractors, your materials, whatever, you use your credit cards to pay for it, take the cash back, take the points, you pay off your bill right away. Why not? And honestly, credit cards are sometimes the best things you can do. Again, with the point that you being able to
Wow.
pay it back, because you're buying $5,000 in materials, you sign up for a credit card with a generous sign up bonus, put it on, pay it off, take the rewards, and maybe 2 or 3 years down the road, you got a free vacation, right?
It's true. You know what? I'm glad you mentioned. I was debating whether or not to admit the following, but because you went there, I think I'm going to bring it up.
Uh-oh.
No, listen, I never forget how hard it was when I got started as a real estate investor to try to get everything done, and when nobody wants to lend to you, because all these things are fine and dandy. Use a HELOC, use a mortgage. What if you
Mm-hmm.
don't have any properties that you own? What if credit cards are the only form of debt that you have access to? How do you use that as your only resource to get started? And I'll tell you my quick story on it, because when I was trying to renovate my first property, which had no equity, there was nothing else to borrow. I had already done the whole song and dance, even just to get that first property. I used my student loan as a down payment. Like, you want to talk about kind of digging deep. I was 100% financing on my first property with a combination of a mortgage and a down payment from my student loan. Then I had to renovate the property, and there was just no way to do it. I'm like, how do I do this? So I used my credit card. I had a couple different credit cards. I had some of those big box credit cards. You kind of walk into some of those stores and they offer you a credit card. So I was like, sure, I'll take a credit card. And they start you off with like a $5,000 limit here and a $5,000 limit there. And what I was doing is I was using that, 6 months, no interest, no payment terms. I would start it. I'd buy all my material, and 5 months and 2 weeks down the road, I would write a check from my other credit card that I just got that had,
Mm-hmm.
cash advance, no money, no interest, no payments, no interest for 6 months. I'd pay off the first one. I could go a year without making any payments and without paying any interest, using a check from one credit card to pay the other. Not the greatest, strategy, but it got me, $10,000 worth of materials, which I was able to use to renovate my property. And when my mortgage did come up for renewal, I got $30,000 of equity out of that first property. I was able to pay everything off, earn points, and pay no interest at all. It was just a lot of work. Like, I was literally I used to have a calendar in my room. Like, on this day, you need to have this credit card to pay off that. Not a good strategy. I know right now you're sweating listening to
No,
this.
you know what? Let's talk about it. Why not? You brought it up. You admit it. I'll say this one. You were smart. Like just the way you did it.
Okay.
Just for, to explain the technical terms behind it, what you're basically doing is taking advantage of zero interest balance transfers, right?
Yes.
That's all it is. And there's a lot of credit cards that offer that. So yes, you could definitely borrow right now, make a payment. Like you said, get a store credit card that has zero interest to begin with for X amount of months. 6 months down the road, you apply for a balance transfer credit card.
Yes.
You transfer your credit over. Just got 6 more months, right? There's so many now. You could probably do it for a few years, right? So we'll just talk about it.
It's true.
Very briefly, right?
Listen, I think it's important. It's not a recommended strategy. This isn't like the first thing you should go and do. But I am also of the mind that, like, let's be transparent here. People are doing this. So, and it is legit.
Here's the thing, right? I'll tell you this much. So that strategy worked basically forever, right? A lot of people did it just for their day-to-day expenses. Sometimes people are like so hardcore. I work with people in finance and they want to beat that 1% or whatever, the 2%. So they're doing it even though they can pay it off because they just don't want to pay the 2%. They're like, I can make more on the market. It's like, okay, great. But like you said, but here's the thing people don't realize. A lot of those bonuses no longer are available because of COVID-19 specifically. So a month or two after the pandemic happened, almost all of the major credit cards that offered balance transfer, zero interest, low interest 2-4%, dropped them because they knew that people were using this strategy to pay. And it was fine when they were moving the money around as long as they could pay it back.
Yeah.
But then all of a sudden you read the news and everyone's losing their jobs. Like, nope, we are dropping this because what if they take advantage of it and they can't pay it back? That said, if you need a strategy to, fund it and your credit cards is the only way, you can still get low interest credit cards for around 8% to 14%, which is kind of high when you think about it. So if you're going to do a renovation, at the minimum, you're going to get an 8% return after materials, fees, realtor fees, land transfer tax, whatever. So it's just it's a much harder game these days. So, if you're the type of person who's thinking it's like, oh, I don't have any other money, the only way I can do is borrow it. Well, that just means you probably shouldn't be doing that renovation right now. Or maybe this isn't the right time for you. And I know it's easy for me to say while I sit here in my home, while other people are out there renting, trying to figure out how they're going to come up with the down payment when prices are getting even higher. I really don't have an answer for that. Unfortunately, it's easy for me to say, oh, go move somewhere where the cost of living is cheaper. I know that's not a reality for many people. And it's a real problem that we have in Canada right now. We talked about debt levels, mortgage rates are at record lows. I was just listening to the news today and average home in a 905 is now over $1 million. Like it's crazy when you think about it. It's not like our salaries have increased. So I'm really concerned. I talked to one of my financial planner friends and him and I were half joking. We said, hopefully one of two things will happen. Either real estate will, correct itself. It always does. Who knows when? Or salaries will increase. But there's one catch. It wouldn't be for us. It would be for our children because who knows what's going on right now? The government just keeps adding additional incentives for you to buy. So if I'm lucky, my daughter will be able to afford a home in the future because prices have cooled off or the salaries have increased. I joke that people, like you said, the underage 45 who haven't bought a home now, it's so difficult. And I really don't know what they're going to do, especially if they live in the two major markets where real estate prices have gone insane.
Well, we don't know exactly what's going to happen in the future, but we can kind of, run the gamut of if things continue the way they're going, how will this be justified? I mean, interest rates for the foreseeable future are going to be low.
Yes, I agree for sure.
And every time somebody says they can't go lower, they go lower, right?
I was one of those people.
Well, and I don't think we're even there. I've been saying for the last 4 years, I have been saying, and this was pre-pandemic as well, I believe that in North America, before the year 2025, we're going to see a negative interest rate mortgage. I said it. Meaning that you'll be below 0% interest. I know that sounds absolutely nuts, but they offer them in Germany and in Denmark and in Sweden. I've seen them in Europe, and I understand how they work, and I understand why they work, and the way that money is working in the world right now. And, and inflation and all the things that we are looking at coming to reality post the current era that we're in, it's quite possible that would be a reality, which means that good luck being able to afford it. The only way you're going to be able to afford it is on a currently 0 interest rate mortgage, which means you're going to be tied in forever because nobody pays back 0% interest. But that is a reality. The other thing that may happen is, I think that, again, and this would be in Canada because this already exists for the most part in the United States, is that if the government were to allow Canadians to write off the interest portion of their principal residence financing, there would be a big incentive for people to continue to purchase real estate. There's still tons of levers that could be pulled. Immigration picking up. Look at what's happened in the last 4 or 5 years. And, since Donald Trump became president of the United States, the pressure for people to move to North America has moved on into Canada versus the United States. So we are seeing all these different factors coming into play. I think that there's just as much of a chance that real estate will double in value in the next 7 to 10 years as it will correct in the next 7 to 10 years.
Well, none of us have a crystal ball, if you want to call it, but I agree. Things can go either way. I'm generalizing here, but one thing I do know for sure, there's no such asset in the world that only goes up in value forever, right? Absolutely. I think that's fair to say. How much things will correct, if they correct, who knows? Because even like a 10% correction would bring things back to what, 2019? Like, what difference does that make, right?
Really, what difference does it make? If you're a long-term investor, even a 50 to 60% correction at this point, and I'm speaking personally because I've been investing for over 20 years, even a 50 to 60% correction, I would still be up, right? I mean, it's, and that's
you
the
would
craziness.
be, but how many people buying now would be? That's the problem. Like we talked about people in Alberta, 10 years, they haven't gained a single dollar. Fort McMurray, Edmonton, Calgary, there's a lot of areas. Your audience is in the US. There's so many places that they ever decide to look up Canadian real estate prices, they would not believe how much it costs. It's easy for me to say, but like sometimes I'd be like, wow, like wouldn't it be great to move to that city in the US because it's affordable? But at the same time, the government knows we have a debt issue as Canadians. They introduce some incentives every now and then to, try to get people to spend less. They make mortgages harder to get. There's threshold limits where you can only borrow X amount of dollars. You can only go certain terms. But then election comes up and they don't want to lose power. So then all of a sudden, free market. Hey, you want it? Hey, you know what? Before it was $25,000 from your RRSP that you could borrow from your future, let's make it $35,000 each. Borrow from your future. Who cares? Just get into the real estate market. Because
is it $35,000 now?
Yeah, that's the thing. Like I didn't realize it. I thought it was a typo when I was reading an article, and I Googled it. Nope, they changed it. Wow. So like it's nuts. So like, how many people have that kind of money in RSP? They borrow it and they don't realize they need to repay it, and then they can't repay it, so it counts as taxable income. Anyways, that's another story, right?
But I do love that. I've used that lesson of using your RSP as a down payment because a lot of people don't know how to use
it. It can be a great thing, right? It's
a great thing. It can be a great thing, especially for someone who's young, who's trying to get into the market. If they've been able to, invest in RSPs, there's two ways to use your registered savings in order to buy properties. One is through the one-time draw as a first-time home buyer. There now you're telling me it's $35,000, which is great. But there's also ways to self-direct too through an arm's length portal. But we won't get into that today because that's pretty complicated stuff. But I guess the last thing I do want to ask you, it comes down to, where do you put your money? Because, as a financial advisor, you're in a tough spot, right? There's, you want to advise people, you want them to make money, but you want to be super cautious about it. And all transparency, typically financial advisors are incentivized to have people invest in certain things that allow the advisor to also make a commission, right?
So that's another problem we have in Canada, where basically there's not much disclosure rules where you can basically sell anything you want, right? And people don't realize anyone can call themselves a financial advisor. You could call yourself a financial advisor. There's technically nothing illegal about it, which sounds ridiculous when you think about it, right?
Yeah.
Like they're trying to change the laws, or even things that hurt Canadians in general, fees that are baked right into your investments, that if you don't hang on to them for X amount of years, you'll lose even more money. So as you said, the advisors have an incentive to sell these products because it makes them more money. And once you're in, and you may have never known this, you're pretty much locked in, or you could lose 5% of your portfolio instantly if you want to quit. And there was some talk about, getting rid of these, making it more transparent for Canadians. But what happened is the current government got lobbied, didn't want to lose those votes. I'm not going to talk if it was provincial or federal, but all of a sudden, someone decided, nah, this isn't a good idea. Why would we want to protect consumers? Like I hate to say, I used to work in news. There's a lot of reasons on different levels of government, businesses, for them to make money or whatever to get the support. And it's an unfortunate thing. So for me, I like to generalize a little bit and just tell people, whether you're Canadian or American, real estate will forever be an important part of your financial future, your financial foundation, whatever you want to call it, right? But at the same time, there are so many other things you need to think about. That could be saving for your retirement, even your day-to-day living. Like, do you want to take vacations? Or do you want to put your kids in soccer? Will you be able to buy them things? Maybe something fancier like private school. If all of your money is leveraged and tied up in real estate, that might not be a possibility. So to me, it's like trying to be smart about the dollars that you have access to. There's nothing wrong if you like to invest in real estate. I'm not going to criticize you about it. Scott, you've obviously done something right, but I'm sure tons of people out there who maybe didn't make the best decisions in life when it comes to real estate. And at the same time, same thing when it comes to investments. We don't even need to get into weed stocks or Bitcoin, but for the last couple of years, everyone thought they'd get rich quick, and some people did. There's no doubt about it. They made millions, right? But many other people got in too late and just saw their investments go down.
Absolutely agree. And Barry, we could go on all day about this. There's so many things that I'd like to dive deeper into, but honestly, getting across at least some of these points is probably pretty helpful for people who are struggling to figure out what to renovate, how to finance it, how to get comfortable with debt. I know that me personally, I'm pretty comfortable as long as I'm using debt as an investment tool, and especially, under 2%. When you're getting interest rates under 2%, and I like to get returns at above 20%, I've got a huge margin there. So I feel pretty healthy. And I think that if people educated themselves on how to use leverage properly, borrowing would be more of a confidence issue, would be less of a confidence issue, and more of a profitable one for them. So thank you for being transparent with me today. I know some of the topics we hit today they hit close to home, and they're not necessarily the easiest things to discuss, but really appreciate it, man.
No problem. Anytime.
All right, Barry, we'll talk to you again soon. I think that Barry and I had more in common than I originally anticipated. For anyone who wants to learn more about personal finance and travel, visit Barry's website. That's moneywehave.com. Moneywehave.com. I like that. Now, at the beginning of the episode, I mentioned a survey by the National Association of Realtors. They talked about the value-added renovations that people are doing this year and that budgets have increased. But I want to tell you guys what the top 3 home renovations that homeowners hope to complete within their budget in 2020. Here we go. Number 1 on the list was a new bathroom. Number 2 on the list was a new kitchen. Now, those 2 are typically in the top 3, top 5-ish. But here's one that's never been in the top 10, and here it is at number 3. The number 3 renovation that people are planning on doing this year, 21% of all respondents say they are planning on fencing in their yard. Oh boy, that pandemic has definitely impacted what people are doing. A fenced-in yard is the 3rd most popular project for 2020. It has never even made the top 10 in the past. So I thought that was pretty hilarious and interesting. But good luck if you're planning on building a fence, because they've also run out of fencing material in the world. So there you go. Thanks so much, guys, for joining me today. I hope that Renovating to Add Value has helped you, guided you in some capacity. If you want to learn more about how you can build wealth through real estate, visit scottmcgillivray.com. And you can always stop by the Real Estate Rebel Facebook group and leave me your questions. That's what I do. I answer the questions when I'm not doing the podcast and the TV show and the real estate investing and all the other good stuff. So check it out. Leave me a comment. Thank you so much for joining me. Don't forget to like, follow, and subscribe. This has been the Real Estate Rebel with Scott McGillivray. We'll talk to you soon.